All right, today we're going to take a look at MSTR versus MSTY and going to dive into the differences between the two and when it may make sense to invest in one or the other, or maybe a combination, and then also layer in Bitcoin as well into the mix. And this is a shout out to one of our followers, FC David G. He asked an awesome question on one of the other videos. What are my thoughts on MSTY? And it is such a great question. I thought it deserved an entire episode just to that topic. So thank you for bringing it up, and let's dive in. All right, so let's start with an overview of what MSTR is and what MSTY is as well. Okay, so MicroStrategy rebranded as strategy. Okay, is what we're talking about. MSTR is the ticker symbol, and the nature of MSTR is they are a publicly traded company, right? With the largest holdings of Bitcoin. There is second only behind Satoshi Nakamoto. I mean, they've got over 500,000 Bitcoin, so that is by far the largest holdings there is. So it's gonna be a very valuable company, no matter what. There's no question about it, right? And it originally was one of the few Bitcoin proxies back in the day before the ETFs came out, and it's evolved into a much more sophisticated offering over time, and highly valuable, right, based on its performance. So the strategy is simple, right? Michael Saylor aggressively acquires Bitcoin using debt financing. Now this is very safe debt in the sense that he's getting it at probably, I think his base, the interest rate is about 1% or less, so he just needs to outrun 1%, and it really can't be called due, which is fantastic, right? But very aggressive acquisitions through debt financing, and the goal's long-term capital gains, which is the same goal as Bitcoin, right? As Bitcoin price goes up, their holdings obviously go up because they have a tremendous amount, and then they have the NAV associated with it, which is then a multiple of that. So it's leveraged Bitcoin play. Okay. Now the investors that this appeals to are those that track, high risk, high reward exposure to Bitcoin price movement. So when the price goes up with Bitcoin, it goes up even more dramatically with MSTR, and when the price goes down with MSTR or Bitcoin, MSTR price goes down dramatically more, right? So it's just higher swings. MSTY is an interesting newer solution or offering out there. YieldMax MSTR option income strategy ETF is the technical name, right? So who's it for? What's the nature of it? It's an ETF, an exchange traded fund, right? And what it does, it actually does something anybody can do, but they do it on your behalf in strategic ways. They're doing covered call strategy on the MSTR stock with the main goal of generating income. That's the biggest difference. Is you're going to see difference in returns, but at the end of the day, with MSTR, it's simply capital gains. Just like with Bitcoin, there is no income generated. It's not like a dividend. ETF is not like a rental property. It's not like a savings account. Even though that's negligible, there is still income generated, right? That's what makes this unique. Now, you could go out there and do your own covered call strategies, but this one is built into the solution itself, which is pretty cool, right? So the strategy ultimately is sell call options on MSTR to collect premiums, and so you're going to get a monthly income, at the same time capping your upside potential. But with these investors, they're willing to give up some of the upside so that they can generate income, because at the end of the day, we all have to pay the bills. And how do you do that? It's got to be income, or you sell off some of your MSTR stock in chunks, and then you let that pay the bills. This is ultimately an income play, right? So who's it suited for the best? Probably investors desiring regular income, with moderate exposure to MSTR's volatility. So it won't be as volatile, which also means by giving up some of the volatility so that you can have the income, you're also giving up some of the upside. But there might be a time and a place for this, and a lot of people's portfolios, right? So let's take a look at what I did is some back testing on the performance of MSTR versus MSTY over the last 12 months. So from April of 24 to April of 25, it's just easy to work in 12-month increments. I know a lot has happened within that time frame. I was considering doing 6 months, but landed on, hey, let's just make it 12, right? So MSTR's performance is that they've done total return of 89% over that time period. And on the flip side, MSTY has delivered 59%. So 30% less. So substantially, I shouldn't say substantially, noticeably, right? Less performance on the total return. And that includes with the invested dividends, but the dividends are substantial. And we're going to get into a little of that as well, because you have to take that in consideration, right? So when it comes to risk and volatility, MSTR is highly volatile exposure. It's going to have bigger drawdowns. In MSTY is simply lower volatility, right? Again, just to recap, MSTR does not provide any dividends, does not provide any income, and it's pretty substantial. I mean, the distribution rates can exceed 100% of your investment in certain periods of time. I mean, it's just wild. It's very impressive. Obviously, there's tax considerations, right? Because as you have income, that will likely be taxed at your ordinary income rate. So it is going to likely have higher tax bills than if you were to sell off MSTR, because as long as you hold those over the 12-month period, then your more favorable long-term capital gains rate is applied. So there you go. All right. So how are these two valued, right? What are the valuation methods between them, right? So MSTR, it really just based, I mean, yes, they have their software company, but it's negligible relative to the amount of Bitcoin they hold, right? So ultimately, it's primarily based on their Bitcoin holdings and the market's perceptions of Bitcoin's future, meaning the MNAV, right? It is really well how that's associated. So it also, so what I'm saying is it usually trades on a premium to the net asset value of Bitcoin's holding, due to just investors' demand for Bitcoin exposure, right? So that's where that kind of leverage piece comes into play there. MSTY, it's determined on the net asset value, which includes MSTR shares, and also the premiums collected from selling those call options. That's the income piece, right? So really you're focused on income generation over capital appreciation, which is going to affect the overall returns. But again, you have to have income, and we're going to get into some of the alternative solutions in detail. But MSTY is one worth, if you can stomach the volatility, you understand Bitcoin, because first you have to understand Bitcoin. And in order to understand Bitcoin, you have to understand the history of money. Let's put the technology piece to the side. Should you understand some of the technical aspects of Bitcoin? Yes, because it's only going to make you more convicted, but do you need to? I think your time is better spent studying the history of money and all the flaws with fiat as your primary area to focus and better understand Bitcoin and the role that it has to play in the current environment than those technical pieces, because it's just like driving a car. Everybody drives a car, but at the end of the day, do you really need to know how a combustion engine works? Or are you just like, hey, the engine works, I'll drive it, right? That's my point with that one. So this is where you have to study Bitcoin, truly understand Bitcoin, understand the monetary system. And at that point, then you can get an understanding of MSTR, and you're going to have an understanding of the markets and these capital products. And then at that point, then you can have a better understanding of MSTY, because it is more complicated with these covered calls. So it is a hierarchy, I would say. First, start by understanding Bitcoin. Understand and see if you're comfortable with the exposure to MSTR. And then I think you then graduate to exploring MSTY as a income play, because I mean, in one argument, you could say, yeah, the returns are lower, and you could sell off. And I don't have the right answer for this, but I'm just talking out loud. Is you could put your money in MSTR. Uh, you have no income, so you have to find other ways to generate income, right? And by doing that, you're then spending that income to buy groceries or pay for a mortgage or whatever a car payment, whatever you have, right? Um, the argument then is, well, if you buy MSTY, that generates income. So any fiat that you earn is more money that you can then put back into MSTR or Bitcoin. Now, I don't know how those numbers exactly work, but it's an interesting approach that in theory, and again, I'm not, I haven't dug deep enough into this because there's a lot of variables at play, but some have argued that by buying MSTY, it just lets them stack harder. Because they do have income to offset their bills, and then any excess income that they earn can go towards more of it can go towards Bitcoin or MSTR. Interesting thought, right? So MSTY, who is it ideal for? We kind of talked about this: income-focused investors that like regular payments, because usually our bills are due monthly, anyways, right? So that's great that it's nice that it's on a monthly basis rather than quarterly. And there you go. So then you can take a look at combining MSTR and MSTY. That's an interesting approach. You don't have to do one or just the other. What if you did a hybrid approach, right? So you've got the growth component, right, towards MSTR, something that you may not need today. I would recommend to anybody, whether they're a Bitcoin investor or any type of investor, just a human being, is that I think you need to track how much money you spend, okay? And there's solutions. I used to use Mint, and now there's Monarch, and there's other ones. But you need to know what your burn rate is, right? And once you know your burn rate, then that gives you a target of the income you need to generate. Because at the end of the day, whether you're spending $10,000 a month or $100,000 a month, the moment that your income, passive income, is $1, or even, like, let's just say $10,001 or $100,001, you're financially independent, right? Think about it. The net worth is a beautiful thing, and you could draw your net worth down, and that can do it. But at the end of the day, that passive income, which MSTY provides, you just need to cover your burn rate in literally nothing. Like, you're free. You're financially independent. It doesn't matter what the net worth number is. You literally have all your bills paid to live the lifestyle that you want. And you can quit your job. You can go pursue certain avenues of interest. You have freedom. That's freedom right there. So that's what's cool about MSTY. I think it's an interesting product. I like passive income. So there you go. So you could do a combination, right? So if you're looking for, I would say one approach is figure out how much income that you need, and you might say, hey, I just want to have enough to pay off my mortgage every month. Great, do that. You could say, I want to pay off a mortgage and a car loan. Great, do that. Or you can just say, I want to pay for my lifestyle. Well, now you can kind of back into, and I get it, this is a volatile asset, right? And so these returns are not like T-bills where it's very defined interest rate. This fluctuates, but it's so substantial that you can likely get to those income levels pretty quickly, right? It's all relative. But you get what I'm saying. So you've got the growth component with MSTR. So some of that money that you have that you don't need immediately, MSTR is a great play. Bitcoin's a great play, right? And if you're looking for an income component, there you go. You got MSTY. So those are some things to consider, and I'm keeping this high level for what we're looking at here. So let's go ahead and take a look at the performance of these two over the last 12 months. And I'm going to give the example of if you invested $10,000 into MSTR versus $10,000 into MSTY from April 20th of 24 to April 19th of 2025, okay? And your ending value of that $10,000 in MSTR would have turned into $27,000. That's wild. I mean, that's a tremendous return. MSTY is less, but still very substantial. It's $17,400 Okay, still a great return. So total return is 17,000 with MSTR. MSTY would be closer to 7,400. Still fantastic. I mean, you put $10,000 in. That's a crazy return. Imagine put 100,000. Imagine put $1 million. Like, those are huge, huge returns, right? So 170% compared to 74% gains between those two. And when you put those two numbers side by side, you might scoff at MSTY, but the dividends were $10,266. How wild is that? You put $10,000 in, and within a year, you got your capital back. You're playing with house money. That's something not to blink an eye at. That's something to consider, right? So, investment suitability, choose MSTR if you aim for significant capital gains, because based on historicals, it is going to outperform, but it's going to be more volatile, right? MSTY, regular income with capital. You do have some, and you're comfortable with some potential capital depreciation as well, right? Like that's part of there because they're doing those covered calls. Now, what we also are looking at is that MSTY. If we're looking at income, you have to think about what are my other options. This isn't the only income generator. This is a newer option to the market, and it's outperforming just about everything else. And we're going to get into that. So, what are typical, commonplace ways in which people generate income, passive income, right? And I get passive is relative, but one of those is T-bills, treasury bills. That's very common. You have dividend ETFs, very common. You've got high yield savings account, and then we're also going to look at rental income as well, okay? From rental properties. So MSTY, all right, I'm going to do this in reverse. We're going to start with the dividend ETF. One of them I looked at here, the annual yield was 3.5%. So you put that same $10,000 in, and your return, and I kind of changed the dates around a little bit, but the dividend ETF, invest $10,000, you get $350 back. Okay. 3-month T-bills was at 4.2%. Now I know it's increased and it's kind of been in different places, but I was looking at a 12-month range, right? So 4.2%. You have $420 after you invested $10,000. Now, yes, these are safe and secure. They're not volatile. Those rates are they are locked in with a T-bill. Let's say it was a 3-month T-bill, and then you just up those every quarter. It's safe, it's secure, and you know what you're getting. It changes slightly from quarter to quarter, but you get the gist. The dividend ETFs, there's no guarantee, but those are pretty standard dividend returns. And then the other one is a high yield savings account. Some of those have been, they're not now. I think they're like 3.9% is typically where I'm seeing them, but they were at one point around 5%. That's good, right? High yield savings account. Those do fluctuate, but they're pretty stable, and so you're looking at $500. What did we talk about earlier? $10,000 got you over $10,000 in income with MSTY. Wild. Even with volatility, you're way surpassing any of these other options. This is not financial advice. This is educational. Do your own research. You have to be comfortable with volatility. But if you are, you could be rewarded handsomely, okay? So let's go ahead and take a look at rental properties. So I said about 12 to 15% cash on cash return. That's what I've seen. It could fluctuate. It could be 10%, it could be 20%, whatever you want it to be. Pick a number, okay? It's a way better return than that's 2-3 times more than any of those other options that we looked at, right? Outside of MSTY, so you're looking at the T-bills and the dividend funds and high yield savings, so substantially better, but you have the headaches of whether you're directly dealing with property management or you've got a company that does that. You're going to have repairs. You're going to have taxes, which keep going up. Um, Everything, like there's a lot. It's a lot more complicated than just buying MSTY and not thinking about it. So that's an interesting approach as well. Okay, because that's a common vehicle in which people will park their money, right, in order to generate some form of income and capital appreciation through rents going up and then the prices of these properties going up over a period of time. So what's interesting is you can almost say and take a look at and argue, if you do a blended approach of MSTY and MSTR, you are covering the two main bases of what makes real estate so interesting, right? Is that you generate income and you get capital appreciation. Well, by combining MSTR and MSTY, or Bitcoin and MSTY, you are tapping into both income and capital appreciation. Now, to the benefit of rental properties, there's a tremendous amount of tax benefits associated with that. So that can't go overlooked either. But if you're looking simply at what is the most hands-off way to invest, MSTR, MSTY, tremendous more amount of volatility than with rental properties. There's no question about that. Rental properties should, when operated well, should be pretty consistent performance, right? And the nice thing is you get leverage, right? Because you can go out there and buy, you put 20-25% down on a property, and the bank will cover the other portion, right? So from an annual income standpoint, a similar amount of money invested in rental property versus MSTY. MSTY historically will outperform. Okay. When it comes to capital risk, rental properties, I don't know, low to medium, I would say. Capital risk with MSTY, very volatile, much higher, right? Liquidity, think about a rental property. You have to list it, okay? You have to negotiate. How is it valued, right? It can go in a lot of different directions. It can be, and then you've got to close on the property, and you've got fees, real estate agent fees associated with selling a property. It's not very liquid. It's just not. There's some pros and cons to that, because when the economy tanks or something like that, people can get spooked out of their positions in Bitcoin or MSTR or MSTY because it is so liquid. If they don't have diamond hands, they can get forced out. Real estate can help you be a little more methodical and not freak out and try and sell these properties right away, right? So that's a benefit. Effort to acquire these, MSTY is a click of a button. Rental property, you got to go out. You got to look at a lot of different properties. You've got to put an offer in. You got to get an accepted offer. You got to do due diligence. You got to go through. There's a lot. It's a lot more active. Okay. Tax advantages, MSTY, minimal at best. Rental properties, very strong. You got depreciation. You got deductions. There's a lot of stuff. There's a lot of benefits there. Scalability can absolutely be there with rental properties, right? It absolutely can. You can refinance, you can do cash out refinance, you can do all sorts of different stuff, which is pretty cool. At the same time, the scalability of MSTY is, as you have income, you just click a button, right? So that's an interesting approach, and maybe the answer is you have some rental properties, you got MSTY, you got Bitcoin, you got MSTR. There's a whole mix of things that you can do, but right now we're really focused on that MSTY and some of the benefits that it offers, and I wanted to compare and contrast those to other options, because everybody does have options. There's a ton of different options, right? But wanted to compare those to some of the most common income generating options out there. All right, bottom line, MSTY, high immediate income. Very intriguing on how high those returns are relative to the majority of the options that you have out there. long-term wealth and tax efficiency, rental properties will win simply because of the tax efficiency part. Okay. Set it and forget it investing, MSTY, every single time. It's because it's just so hands off, right? So that was a look at some of the income generating solutions, but we also want to bring this back to Bitcoin itself, right? So the short of it is Bitcoin is ideal for long-term conviction holders, for hodlers. Bitcoin is best when hodled. You buy it, you hold it, and in the future there will likely be vehicles in which you can take loans against your Bitcoin so you don't have to sell it. There's all sorts of cool stuff, but Bitcoin is tried and true. Keep it in cold storage, and to me, I think that's probably one of the easiest ones. Like if you're a person who wants to sleep at night and you're convicted, you have to be convicted. It's probably the easiest one to sleep at night, holding Bitcoin in cold storage. It's there, right? The risk level, I don't even like to use risk level. I mean, I'll do it, but I don't see it, whatever. We'll call it medium risk, right? Reward is high, right? Digital gold, it's a macro hedge. They keep printing money. Bitcoin keeps going up in price. MSTR, high growth leverage BTC exposure. The risk level is high, okay, because it is that leverage piece. That means the reward is very high, okay? Downside's also dramatic, but very high reward. Bull runs, aggressive growth, that's when MSTR is going to sing. MSTY, monthly income, BTC adjacent strategy, risk level, when we're comparing that to MSTR or Bitcoin, I would say medium high in there. The reward is high income, substantial income, yield seeking side income, right? So when do you buy Bitcoin? Well, let's go the opposite. Who doesn't buy Bitcoin? If you want passive income, I think everybody should own Bitcoin, but if you really, really want the passive income, you're not going to get that from Bitcoin. You're going to have to sell it off in chunks. If you're scared of volatility, Bitcoin's not for you. You got to have diamond hands. You can't be spooked out of positions. You can't panic sell during crashes, right? MicroStrategy. Who's it not ideal for? Anyone who's sensitive to drawdowns, because this is going to go down harder than Bitcoin is. It's going to go up faster too. You need consistent income. MicroStrategy will not do that. That's the answer there. And then the MSTY is not ideal for people that are big into Bitcoin in a raging bull market, right? Because you're going to miss that upside due to the capped returns. Okay. But you can implement that with a hybrid strategy and maybe you can live with it. Then you're fine. The other one is you need to understand options mechanics, because if you don't, that's what this is all built around. Would recommend having a basic understanding of that. And also, if you want long-term capital appreciation, it's not going to be there. The beauty is these things all intermingle and mix together. I would say you just need to figure out what your ratios are. Is it 100% Bitcoin, 0% everything else? Or is it a hybrid approach and a mix and match of all three of these, right? But we want to do a high-level overview of the pros and cons and benefits and differences between these, right? And so ultimately, MSTY is very interesting. We all need to pay the bills somehow, and whether that's through selling through capital gains or that's having income generation through covered calls. MSTY is something to explore and figure out what that burn rate is, and then go be financially independent, right? Be free. That's the whole goal of all this. Just be free. Do what you want when you want, with who you want, how you want. So, in summary, Bitcoin, cold storage, ultimate solution. I think it's always wise to have some of that. MSTR, great leverage play. Got to be able to stick it out to the volatility. MSTY, pay the bills, get some side income. Pretty cool solution. Check these out. Like and subscribe below. I hope you guys like this one. Keep stacking those sats.